Jeff Park from Bitwise. Welcome, man.
Happy to be here, Archie. Thanks for having me.
I really, really appreciate you coming on in the early episodes because it's all very well and good when we're up and running and the audience is large and everyone can see some of the benefits of appearing on the podcast. But you're an early adopter, so
For
from the
sure.
bottom of my heart, I really appreciate you coming on.
No, happy to do it. And I can also tell you, as an investor, it is amazing how memorable day one investors of your efforts and funds can be. Your day one investors are always your favorite. Uh,
Yeah, it's a special moment when you get that yes, right?
Absolutely.
Definitely. And I'm grateful for it. I just try to make a point of always appreciating people who help me out. I remember when I first started this account and Max Kaiser retweeted me. Oh, because you're starting out, you've barely got a few hundred followers, and then
Sure.
the impact of Max, like a couple 100,000 Bitcoin OG retweeting one of your posts, and you just get all this attention, and suddenly like 100 people start following you. It's just so exhilarating, It's just, and so like anything Max, anything Stacy wants, happy to support, happy to sort of um, give it a bit of a boost as well. So hey, man, a lot of things happening in the world. Now,
Oh, man. Yeah.
people don't really know, or they may not know too much about exactly what you do. You're head of alpha strategies at Bitwise. Um, can you tell us a little bit about yourself and what you do there, what that means?
Yeah, absolutely. So I was brought on board to Bitwise about 3.5 years ago, and my mandate was essentially to build out the Alpha franchise to complement the existing suite of our amazing products that are geared towards in helping investors find access points to crypto. Here's the remarkable thing: Bitwise has been around for now over 7 years, and the unique challenge in this space can also be the privilege in which that there are not many asset managers that can actually survive through the peaks and troughs of what a cyclical industry crypto can be. And that volatility makes it challenging, but at times also a unique opportunity. And so my mandate really is to help broaden the investment arena for crypto curious, crypto professionals, and really find alpha. It's one thing to invest in Bitcoin and long only and have a view on what that means as an alternative asset in your portfolio. That is in itself alpha, in my opinion. But one level deeper, layer two, layer threes of the crypto arena will also show you there's a ton of exciting things that can be happening, creating different kinds of inefficiencies, arbitrage, structural dislocations that could be just as worthwhile from a higher risk adjusted return. And that's my mandate here to help Bitwise investors access.
You posted something that caught my attention perhaps a couple of weeks ago, and you called it your highest conviction macro trade.
Yes.
And you said, bookmark this. So, like, you're calling it, mate. You're Babe Ruth, and you're pointing for a home run. Okay, so I took note and read it. It was only a short note, but it was very rich and very complex. Essentially, well, it's I just reread it again. It's so rich, like I don't even know where to start the question, right? Because there's so much happening in the world right now with respect to tariffs, interest rates, and this trade essentially captures all of that, or a lot of that, and it's taking a position one way or the other. Um, can you just briefly explain your highest conviction macro trade? Because I think it's a really good place for us to start the conversation, given what's happening in the world and what has unfolded in the last 2 weeks with tariffs with respect to United States and China, the market reaction, and your trade is essentially a view on that. And I think it would be a really good place for like people to understand not only what you do, but how you think about certain things as well.
Yeah, absolutely. I think this reality is that the privilege I get to experience when I talk to investors across the board is that Bitcoin, in a way, is a little bit of a mirror as to what it represents based on your own perspective as to what captivated you to begin your crypto journey in itself. So I meet a lot of investors, and you see a broad, tri-pronged sketch of the kinds of personas that you see in the space. One part of it is financial services professionals who think about Bitcoin and crypto as an asset allocation with a macro bent in what it represents as an uncorrelated asset, especially as a store of value. But then you also see a host of investors come in from the technology angle, where they're really interested in the network effect and the scaling that's possible in payment processing, and relatively like growth oriented initiatives that is distinct from like a store of value construct. And then you'll see people who come from like a trade angle where they think about it as like a currency, and it's actually just like frictionless, borderless payment mechanism schemes, and it's not store of value, and it's not even actually like a technology play. It just is like a way to have capital flows done in a seamless way. And uh, based on the macro environment, my belief is that Bitcoin can over-index to one version of the story and under-index to another story, depending on what is thematically the momentum capturing narrative at its time. And I felt very strongly post the election of 2024 that Bitcoin would enter an arena where no doubt the macro commentary would be the leading lens in which investors would access this particular asset class in 2025. Um, I think there's a reason for that. The reality is that there's a lot of global macro uncertainty, and it always was the case, even with Trump being reelected, as to the mandates and initiatives he would be allowed to run with that would put global macro really at the forefront. Um, so what we're essentially seeing is that play out. You see that actually in a way where Bitcoin is really the dominant asset that people are trading for risk exposure, and altcoins have generally suffered in weakness relative to Bitcoin dominance. You also see Bitcoin's volatility adapting to a world where volatility is increasing in other non-crypto related asset classes. For example, you might have seen very recently the S&P realized volatility exceeded Bitcoin's realized volatility. Now that is a unique phenomenon to observe in a time where the world is essentially fairly chaotic. So that's kind of the backdrop, right? That's kind of how you have to appreciate what is the 2025 story for Bitcoin. And to put the one pager in a summarial, pithy one-liner, the conclusion ultimately is that Bitcoin wins in all circumstances, no matter what the macro is. And there's two ways these macro stories can play out. One is a very inflationary world, and one is actually a deflationary world. We can go into what constitutes those outcomes, but the reality is both of them are actually a great environment for Bitcoin, because Bitcoin is essentially the unifying asset that can represent a store of value that is relevant to an inflationary America or a deflationary global world as well.
Is the investor profile that leads in either of those circumstances different?
I think the pace of adoption could look different amongst different segmentations based on these scenarios. So the base case that most investors, I think, are looking at the market today is that Trump will generally not put tariffs as a permanent fixture of the next, 20, 30 plus years of American continual globalization efforts and trade liberalization. I think that's kind of the base foundational view the market still is hoping for and is expecting. And that's why you kind of see the market moving up when Trump scales down a little bit on the tariff rhetoric. And then likewise, you see the market going back down when Trump doubles down on protectionism and the barriers start going up again. So I think the mode right now is still very much with hope that Trump will actually unwind some of the initial thrust he put into the protectionist era energy. And in that world, it's business as usual, right? What I mean by business as usual, we're going to continue to have fiscal dominance. We're going to continue to have monetary debasement, and there's going to be the hidden cost of taxing through inflation. And those things are still very much the way the world has operated post 1971 and will continue to be. Great for Bitcoin, great for, in that case, Americans to continue to own Bitcoin as a way to outperform dollar debasement, as would be the rest of the world. But in this scenario, the US still emerges relatively strong, right? The US still gets to exhibit dollar and financial hegemony that they can exact upon our allies and our enemies. And the US remains kind of the superior force in global monetary frameworks. The other version, which is the one that the market is very scared about, is the one that Trump continues to push at times, creating stability and volatility in the market, which is essentially unwinding the global trade world post 1971 that the US has essentially benefited from, as well as its allies. And in that world, actually, there's a lot of ripple effects. But I think the biggest ripple effect in that world will probably be felt by foreigners, because there's a lot of alliances the US has across the world where those investors are benefiting from the ability to invest in US assets, right? So take, for example, Japan, now our largest financial ally. They own more treasuries than China at this point, and continues to fund a lot of the cheap cost of capital for US consumers today. And they're happy to do that at some level because they also own US equities and US real estate and other US centric assets. But in this world where the trade deficit is being unwound and therefore the capital account surplus the United States has is also being unwound, we're talking about flows of funds where our net creditors are willing to reallocate away from US assets into something else. So that's actually a point where countries like Japan or South Korea or even the EU would imagine investing in Bitcoin as an offset to that account surplus from the United States. And that is actually also really good for Bitcoin, but it's just a different dynamic as to who the net investor becomes in that deflationary world versus the inflationary world where business is continuing as usual.
When we talk about capital flows on that scale, on the global scale, the numbers can be quite astronomical. And what is the scale of that potential unwind? And how much of that could Bitcoin realistically absorb or attract in that unwind scenario?
Yeah, it's a giant number. It's a giant number because it's not just the actual notional amount of the securities in existence, but it's the velocity of that turnover too. So we usually think of GDP and these things like static numbers representing like a particular size of a pie at a time. But this is kind of like your typical what's the balance sheet versus income sheet difference in how people analyze what's happening at the underlying level. And the money velocity is equally important. And what you've seen over the past few years is that the money velocity itself is increasing by the rate of refinancing. So one of the programs in which Janet Yellen succeeded in was to change the issuance calendar, in which the US currently is being funded by shorter term T-bills and notes than long dated bonds. It's actually closer to like a third of our financing program that is happening on shorter dated notes that needs to be rolled. So now we're talking about rolling shorter dated notes over multiple periods of time, where if you historically had a 10-year note or a 30-year note, you wouldn't have to touch that. Those are locked in fixed cost of capital. And that velocity is increasing. In that same lens, it's not enough to think about Japan having an X amount of treasuries as a notional amount. It's also how often they leverage that in the way that they are funding the global carry system. And no one really knows how large the global carry trade is because it's actually
Can
a
you
very
can you just expand on that point? How is it that nobody knows and can track the size of that? Because to me, as someone who's not a financial market participant like you are, I don't understand how that's possible that nobody knows.
Yeah, it's a great question. I think there's several layers of uncertainties and lack of clarity in the ways that we don't have perfect monitoring. One is cross-border flows in general can be challenging to monitor because the mechanisms in which it can happen are not always reported. So, for example, you know that the way China operates and how they even hold their treasuries is not actually consolidated. No one actually knows exactly where the bonds are that the Chinese governments hold, into which entities, to which there can be different exemptions of reporting based on jurisdictions. So that's a structural thing, and that's a jurisdictional thing. The second thing I would mention is that leverage in the system is always hard to know. And it's not that different in crypto as well, where you see sometimes people doing what is now called recursive looping. And you can basically borrow an asset and deposit it and then keep doing that trade. And it becomes basically like a fractional reserve banking system on its own. And that recursive leverage type of dynamic is hard to monitor because that notional itself is a fleeting number, and it's not like a number that is like widely tracked. So when you think about what the global carry trade ultimately is, it's an arbitrage that is happening from a cost of financing perspective. And because we're talking about relatively low interest rates, both in Japan and historically in the US, to make this trade worthwhile, you need a lot of leverage because you're essentially assuming these rate volatility is going to stay low, and because it's low enough, people are willing to take smaller haircuts and therefore give you more leverage, and that's how the leverage builds up. And of course, what ends up happening is usually that those numbers were in fact not that stable, and the leverage you built based on those assumptions were entirely wrong, and that's when you have crisis. That's when you have basis spreads blow out. And a lot of the global carry trade is essentially done with a lot of leverage. It's done with leverage because people think the dollar is stable, the yen is stable. The relationship has been known for decades now into how they react. And it's a kind of financial repression that has ultimately created that environment. So it's hard to know because the reporting is leverage in itself, and you don't always know which pools of capital are taking that leverage either. That's why there's growing calls from the Fed as well, and trying to demand higher transparency of reporting from hedge fund entities that tend to be exempt from the kinds of public reporting frequencies and granularities that are required of otherwise things like 40 Act funds, for example. And the constant tension that we're seeing about needing to know more about this, pool of liquidity is essentially trying to understand the fragility of that carry trade better, and it's a work in progress.
So we seem to have had a situation almost like a tinderbox where it was ready to light up, and we have Trump coming in. He's got particular objectives in mind. One of them that he stated is that he wants the 10-year to go down, but I don't think that's happened in response to his tariffs. At least a few charts that I saw floating around seems that the market has reacted in the opposite way in which he had anticipated. Why do you think that's happened? What are the implications of that? And what else can Trump do to get what he wants? Because I recall that you posted that if Trump wants the 10-year to go down, he will do everything possible to make it go down. I just wonder what other tricks he has up his sleeves to be able to make that go down.
Absolutely. Here's the trick. Most of the financial equations have a self-balancing effect. Most of the things we do in the capital markets is zero sum. And there are ways that cannot be zero sum, and that is if you can find some arbitrage conditions around leverage or volatility or duration. Those are usually the parameters that people are solving for to create outcomes that look like they're not zero sums. But ultimately, I have the view that most things are zero sum, and the particular thing with the 10-year rate and the dollar strength is that they're related. In a world where we don't introduce biases, the general mathematical relationship is that if the interest rate goes up of like a domestic country, the currency of that domestic country also has to weaken, and that's because that's the arbitrage free condition of FX parity. Like if I'm earning a higher yield in the United States and I can otherwise then take that yield and go elsewhere offshore and invest for the same return, the currency pair matters. And if the rates in the US are really high, it means you have to offset that by having a weaker dollar. All things considered, in a ranged condition of no arbitrage. So the idea of having lower 10-year rates and a lower dollar is very challenging. That's the most important thing first to acknowledge, that that is not a normal condition. Usually they have to move in offsetting directions. And so the question is, what do you prioritize? Do we want a lower dollar as the thing to solve for, which will likely then result in higher rates? Or do we want lower rates, which probably means there's higher dollars? And this relationship is actually one which has conditions for as a zero bound. And this is the problem. You can't really have both unless you try to do something really clever. And what we're seeing is actually that the market has decided at some level that we're going to prioritize dollar weakening in the ways that we are observing what foreign actors are doing. And there is a revolt on the back end of the 10 years and the 30 years that is being driven entirely independent of US monetary policy decisions. Because the great myth about the shape of the curve is that the Fed can actually only influence the short end of the curve. When they set their benchmark policies, they're talking about the short end of the curve in which they control the cost of financing into the banking liquidity system. The long end of the curve, those are buyers and sellers of long dated bonds. And as we know, that tends to be foreign investors right now that are holding the bags for the United States for the most part. And they can actually exert some pressure there. And it's related to credit worthiness ultimately as to what's the cost of capital to think of US as a risk-free sovereign, which is kind of the default assumption that most of modern finance is built on, that the US treasury benchmark curve is the risk-free sovereign of the world and everything is benched off of it. Well, people are reimagining that may not be the case. And if that's not the case, then you have to basically ask for a premium. And that is what's happening on the long end of the curve. And this is not surprising to me because the relationship between the trade deficit and the capital account surplus is a very known trade-off. Like when the United States decides to run a trade deficit, it means that they're essentially letting dollars also flow to foreigners in ways that dollars have to come back to invest in US assets somewhere. And so that results in a capital account surplus, which is partially the reason why we have a very financialized and high performing capital markets. If you unwind the trade deficit, really there isn't a lot of leverage otherwise than to imagine the same outcome for your capital account side of the balance sheet, which would then mean you're selling US treasuries, US stocks, whatever, and that of course raises long-term rates. And that
So
is essentially what
this
we're seeing.
touches on a very important point. I just want to give some context to the discussion regarding Trump's actions. Is that ostensibly the whole premise behind these tariffs is that the world is ripping off the United States because the United States has trade deficits with many, many countries. But you've just outlined the point that actually that was necessary in order for the United States dollar to be the global reserve currency. And so if you want one, it's necessary that you have trade deficits in order to be able to supply the world with the global reserve currency. You can't have one without the other, or at least that's been the conventional wisdom. Is it possible? Is it possible for them to have one without the other? Because there's the other thing, the other concept that I sort of found a bit head-scratching when I first heard about it, and I'm revealing my ignorance here, is that the Eurodollar system is that actually there are US dollars created in the European banking system and the Fed has almost nothing to do with that. So there are other ways for the US dollar to be created for the global economy.
Yes.
Other than continuing to maintain a trade deficit. But is it actually possible to eliminate trade deficits and still have global reserve currency, US dollar?
So here's the thing. There's a lot of stuff we take for granted in the ways that we have a financial system that works the way it has been, because that's always the way we've known the world to exist. So there are elements to this that can be fundamentally and radically changed, in my opinion, and crypto can play a big role into this. And I think stablecoins in particular can play an amazing role into this. So take, for instance, why does it mean when you run a trade deficit that by definition you have a capital account surplus? It's very simple. If I'm running a trade deficit, it means I am basically importing more than I'm exporting, right? That's ultimately what that means. If I'm importing more, that means that the foreigners are essentially selling more into the United States where they're earning dollars. And that dollars has to go somewhere. And they have a surplus of these dollars because I am importing more than I am actually exporting. It's that simple. There's just more dollars that foreigners than they have that needs to be invested. And this is the crux of the issue. The dollar, though, doesn't always represent the correct pricing for what the domestic monetary policies are being set for, because it is serving as the reserve currency as well, right? This is called the Triffin dilemma, which is that ultimately you can't run domestic policy soundly if the currency is also being used by foreign investors managing their own capital flows, because that creates their own supply and demand dynamics, and they're intertwined. It's almost like you have to imagine a world where there's like onshore dollar for American needs and like an offshore dollar for foreigners to do whatever they need to do with it. This is actually not unrelated to why China has a 2FX regime. You may know that they have CNY, which is their domestic renminbi, but they have a CNH, which is their dollars that are, the yuans that are being used by offshore investors in Hong Kong. They're both the same Chinese renminbi, but they're two different currencies. And there's a relationship between these two currencies, which is that people expect there to be a tightness in how they trade, but one is floating. CNH is floating because it's part of the global capital markets. CNY is onshore. Its capital accounts are closed to domestic only. And the arbitrage between those two currencies, happen with specific financial players that are regulated by the Chinese regulators. This is actually the way to imagine how you might solve a Triffin dilemma type of dynamic, right? But this is now looking more like China and less like the United States. But this is why China has a dual currency system, because the mandates can differ based on the foreigners and domestic needs. And so for the United States, leader of the free world.
Go ahead. Sorry,
Yeah.
now go ahead.
No, so for the United States, I think this is a very tricky position where they have to imagine a more creative way to think about how the dollars can be used that can fulfill the goals of their domestic citizens as well as the foreign investors. And that's why I think stablecoin has like a unique lens for which there can be participation for. Because people want US treasuries because it's safe. But wanting US treasuries does maybe not necessarily mean that they want US dollars. And there is a difference here. To buy US treasuries, you must own the dollars to buy the treasuries. But imagine a world where actually you don't need dollars physically to buy US credit risk. And you can remove the dollar out of the equation entirely from a trade flow perspective. Because then that would allow the possibility for the dollar to also not artificially be higher by the demand of foreign investors who just simply need dollars to buy treasuries, when all they want is actually they just want to buy treasuries. And this is kind of the thing that stablecoins, I think, could ultimately solve for. It'll be entirely revolutionary and radical and different than the way people generally imagine. Like, how do you buy a bond without the underlying currency? But if you can solve that problem, I think there's a lot of things the US can benefit from.
Okay. A US dollar stablecoin is a de facto US dollar, right?
Sorry, come again?
A US dollar stablecoin is effectively a US dollar.
Well, it depends. It depends. This goes back to the Eurodollar thing. Is the Eurodollar essentially representations of the treasuries? And I would say it's yes and it's no, because these are not official issuances by the US government, so they're not backed by the sovereignty of the US government at all.
But with stablecoins now being mandated to invest in US treasuries,
Yeah.
that's I guess that's quite a significant distinction between Eurodollars, which are not, and US dollar stablecoins like Tether and and Circle, which soon will be if they haven't already. Well, I don't know when that legislation will come into action, but well, they have. At least we know that Tether has been investing a very large amount of their funds into US treasuries, so backing the Tether with US treasuries. But soon they will be mandated to do so. I don't know the exact number, but a high percentage.
Yeah.
So effectively, that I guess that makes a distinction between the two. And doesn't that so if then US dollar stablecoins grow in adoption across the world, doesn't that exacerbate the Triffin dilemma?
Well, it can. It can, because again, if you're funding it with US treasuries for which there needs to be dollar ownership, then there's going to be strength on the dollar. So the stablecoin legislations that are unfolding today, I think, is a great start, but it hasn't, in my opinion, yet fundamentally addressed any of the bottlenecks and problems in the ways that we're improving the financial system. I think there's visions of stablecoins not looking like the way the legislation exists today that really then become game-changing endeavors. But the current format is no different than a money market fund type of entity, which is actually what stablecoins today, principally be discussed, represents, even without the yield-bearing component. So actually, in my opinion, stablecoins in the current draft of non-yield bearing dollar stablecoins is the worst of both worlds, right? Because think about it, like why would
For the holder, you mean,
for the
or for
holder,
the United?
for the
Okay.
holder, yeah, for the holder, especially U.S. holders, like why would you hold a non-yield bearing money market fund? It makes zero sense. Now, you can imagine foreigners might be happy to do that because, like I said, there's value in like the sovereignty of the risk-free rate that they can access that you can't if you're living in Argentina, for example, and that's valuable to you. What I'm trying to imply here is that there's a way to bring price discrimination of US treasuries that hasn't been done before, which is that the privilege of having US assets as a foreigner might be worth a haircut. And there may be a skim you can apply just for foreign investors that you don't apply to domestic investors. Because domestic investors, again, they're part of the system. We're part of this country. We're part of actually the growth economy agenda that is aligned. It's the foreign investors where there's a slightly different alignment. So the thing with Tether is right now it's working because there's a lot of offshore investors who are just happy to have dollars, but they're saying also like I don't need a yield for it because I'm happy to have my dollars. So what does that mean? It means actually the Tether and not the United States is enjoying what is historically called the exorbitant privilege, which is the ability to monetize people's desire for a reserve currency at a subsidization that no one else ever can. And what's happening really is that Tether is capturing all of that gain at the cost, frankly, of the United States at some level. Now, this makes it sound like Tether is a negative or a bad actor, but actually, that's not my point. My point is there's a strong demand for offshore dollars, and Tether has found the opportunity to capitalize upon it. And the US will recognize it, and they'll want a similar conduit. But the thing that I think everyone will come to appreciate in the near future is that by definition, it cannot be an American entity that does it. Because the whole point of why people want to invest in offshore entities is precisely the same reason the United States doesn't want them to hold it, which is they don't want to be surveilled and have AML KYC issues or debanking issues or credit freezes in a way that puts their entire asset base at risk, right? Kind of like what happened to Russia after the Ukraine invasion. They don't want stablecoins that can turn off the next day. And
But we've kind of got that anyway, though, right? I mean, Tether is all they boast about their cooperation with law enforcement and United States authorities.
yeah, well, so we're gonna see. We're gonna see how this unfolds because right now I do think there is a little bit of a grayness as to the profit motivation that is a private entity versus what otherwise I think could be generally perceived as a public good and a public service.
Yeah.
Uh, but the point of it I'm trying to make is that people compare Circle and Tether as if they're competitive dynamics, but they're different. Actually, they can coexist because Circle is not trying to do things uh, in the way that Tether is trying to do things, and they serve different needs.
Hmm.
And that's the beauty of the Eurodollar too, right? Part of why the Eurodollar worked was because at the time, after World War II, a bunch of countries wanted to park their money with the US, but they grew slightly skeptical of the possibility of doing it, and they just preferred Europe as a destination they felt would be more neutral. So they actually looked at countries like France and Switzerland, and of course the UK. All of them had Eurodollar markets, and it turned out the UK won that. But actually, it's a fascinating study in history to see what exactly unfolded there, why Switzerland didn't win the Eurodollar market and all those dynamics. But the point is, it cannot be the United States. It must be offshored away to build credible neutrality.
But there's still a flow-on benefit to the United States in generating demand for U.S. Treasuries, and that should somewhat, depending on what the demand is like, put some pressure on rates to go
Yeah.
down. or at least whatever the difference would be if they hadn't been buying that. So that will be an interesting dynamic to see to what extent that scales up, with, I guess, the permission of the United States. Once they put that legislation into place, effectively, that's a stamp of approval.
Yeah, I mean, there's three kinds of stablecoins as a bucket that is being discussed. One is the non-yield bearing stablecoins for domestic purposes. I really see that more as like payment processing. Like we're talking about how do I get paid from Bank of America and transfer it to PayPal and not use Zelle, or I want to use Zelle, but how does Zelle talk to Venmo? It's that problem. And then it becomes like a B2B merchant problem where like, hey, I'm Shopify or Stripe and I'm collecting these payments. How do I make it seamless for the end consumer where the stable coins are better proxies for like immediate liquidity than the way like banking system is built today. But it's all closed. This is closed dollar for dollar transactions. There's no concept of yield. I don't think most people are interested in non-yield bearing stablecoins in the crypto world today. When crypto people talk about stablecoins, they're talking about yield at some level, and it's not a fintech angle. And the yield story has not played out yet. The stablecoin legislation so far has made it fairly clear that the scope is for non-yield bearing stablecoins. And so this is a fintech version. There will be a yield bearing stablecoin, but then securities law gets pretty involved because right now anything that has yield components are securities by nature. The stablecoin that is non-yield bearing may be exempt from it, but the moment it starts touching yield, it becomes more likely a securities. And then we open a very big box of the regulatory apparatus into who can touch it and who cannot touch it. And that is then again different from the third bucket, which is the offshore stablecoin at the benefit for foreign investors who may want to hold US treasuries and US cash. And that is different than servicing US interests. That's kind of, I see like the big picture of like where stablecoins will go from level 1 to level 2, ultimately, to level 3.
I think there's been a lot of attention given to tariffs, and for obvious reasons. But the elephant in the room still seems to be the United States government debt, and everything kind of revolves around managing the refinancing of that. I really want to go into some of the trade, geopolitical, and power politics around what's unfolded as a result of tariffs. So that the tariffs have kind of been the slap in the face, but it's not really the original insult. And that to me is like, I don't think it's going to change, that this debt ceiling is going to stay where it is. And you've mentioned earlier Janet Yellen's refinancing with shorter date debt, which then adds to the volatility of the overall markets as well. What are the chances that they will get what they want? Because I see the market, and I know you mentioned in one of your recent posts about vigilantes as such, and that's quite an emotive term, often associated with the actions of Soros in the 80s when he famously broke the Bank of England. And people have kind of been lamenting that we don't have this market correcting mechanism anymore. But do you see what's happening in the market now with respect to rates on the 10-year as a kind of re-emergence of vigilantism, or is it just, essentially they're just investors who are taking the opposite view, they're disagreeing with the official government narrative? Do you see that as a growing trend, and like which sectors of the market are leading that?
Yeah, it's such a fascinating question because vigilantes, by definition, has been used to talk about American investors in the past. Like, hey, American investors are revolting because they disagree with Fed policy and they're going to give them a hard time. So it will be like, the Stanley Druckenmillers or Soros, as you said, as Americans trying to exert pressure to American policy. But you can imagine at some level that could today, right now, in this political climate, be construed as unpatriotic because this is actually then the antithesis of when war bonds used to be a mechanism to finance U.S. military expansion. When you used to have these war bonds concept where like everyone needs to go buy war bonds, and I know the rates are not as good, but you're doing it for the country because the country is fighting for you, and this is your way of putting in some skin in the game financially to help finance the war, right?
Because the government couldn't simply print money back then when it was on a gold standard,
Yeah,
and we've
yeah,
long since departed that. Yeah.
yeah. But what I'm trying to hint here is that buying treasuries at the core and selling treasuries is a political endeavor at some level, and it's a question of patriotism too. And the worry that I have today for bond vigilantes is if they come out very strong, the political mood is so sensitive towards whether you're on the MAGA agenda or not the MAGA agenda as to America first, that they can be construed as un-American. It's actually a little bit of a dangerous time sentimentally to express anything that might increase the cost of US financing in general, in my opinion. And I think the world is kind of going in that direction where the emergence of bond vigilantes would be suppressed because it would be construed as like an unpatriotic thing. And nobody wants to live in America and be called a traitor.
Can I compare another situation? And perhaps you can comment on why that's different this time. Is that quite a lot of people in the markets, guys like Ackman, made a lot of money shorting American industry in COVID, right? And, I think a lot of citizens thought that was unpatriotic, but there was no institutional backlash. Why do you think perhaps, and I'm guessing you're kind of alluding perhaps to some kind of a punitive attitude taken by the administration towards people? Please correct me if I'm wrong. But why do you think there was no reaction to that, but you suspect there could be a perception
I
of
think
unpatriotic behavior by market participants?
Well, first, I would say I think there has been some reaction to it. It's now widely known that Bill Ackman in general does not short companies; that he only does long only investing. So I do think that's different. Though it's also un-American to violate.
Sorry, can I just interrupt? Did you say Bill Ackman does not short companies? How? Okay.
Yeah,
Can you any insight into how he made money? Well, I don't want to say shorting, but how he made money in the COVID crash?
yeah, I'm talking about now. So
Oh, all
he
right.
used to
Okay.
short a lot. He used to short on activist campaigns. You may remember he shorted on Herbalife. There's a whole history of Bill Ackman shorting, but I would say today Bill Ackman does not do a lot of shorting, which I'm trying to convey the sense that the mood has changed in the elite circle of how to demonstrate at some level what patriotism can mean. And shorting has become a little bit of a challenge dialogue. But I would also argue, and I think many would agree, shorting is very much a feature of a well-functioning capital markets. When things are not priced correctly, one of the great innovations that the American market has permitted to prosper is the ability to have shorts come help price discovery. Because shorting is actually effective in ensuring that the market is functioning at the right price. You see other countries at times of financial distress saying shorting becomes illegal. In the U.S. too, at one point, shorting financials became illegal in the crisis. And there are mechanisms that people put in place, but these things feel un-American, uncapitalistic. But these things tend to happen exactly when you need to save the government or save the market or save the country, right? There is a correlation here.
When there's systemic risk,
Yeah.
that's sensed by
Yeah,
regulators.
and this is kind of the great myth of American capitalism. America generally looks like a capitalist country, but there's lots of things that happen behind the scenes when the national security prioritization takes control, in which then some things will look very un-American and uncapitalistic.
I'm really glad you said that because I'm going to open a discussion later on about that and contrast it with another country when the time comes.
I look forward to hearing it.
Okay, good. I'm really looking forward to your opinions on that as well. That's okay. So what I can anticipate then, if Americans don't short, then the rest of the world will. And I guess a few days ago there was the rumor that Mark Carney, who's the incumbent Prime Minister of Canada, former central bank of England, and also Bank of Canada. Was he the central? Yeah, he was, wasn't he? Perhaps he may have coordinated an international effort amongst like-minded countries to respond to Trump's tariffs with a gradual and persistent sell down of US treasuries.
Yeah.
What do you make of that?
Yeah. Look, I mean, it's a function of their own countries needing to fund their currencies in the ways that it needs protection, right? Because if the US continues to depreciate the dollar, then that means by definition other currencies are getting expensive too. And if you're an export driven country, this is very bad for you. So you actually then need to be able to sell your own currency to weaken it, which means by definition you have to buy dollars. And to do all those things, you need to actually start interacting with your holdings. This is essentially why China actually has to go out and start monetizing some of their treasuries.
That sounds like a very pragmatic explanation, though. And I wonder if there was something a little bit more retaliatory
There
with
could be,
respect to
there could be,
uh,
there could be,
with respect to
but
tariffs.
it could be, but it's also entirely defensible that you can do these things as a rational endeavor for defending your own domestic agenda,
Sure.
which is why I think when people use the word like currency manipulator, it's a very ironic thing because essentially currency manipulation doesn't happen by itself. There's a pair, and there's a pair that is being affected by it in a way the market is reacting to.
Hmm. I guess, yeah, the point I guess the reason why I brought that up, other than it being a little salacious bit of rumor, was if the American investors don't short, that will open up a large opportunity for international investors. So if they don't do it ostensibly, perhaps because of patriotic sentiment, that's going to leave perhaps quite a juicy opportunity on the table for international investors. And I wonder how long they could resist, American investors, resist the opportunity to short in defense of patriotic sentiment.
Yeah, we have to be careful here. We have to be careful. Shorting is different than selling, and international investors can sell, and that's enough to bring down the market. I don't think international investors have to mercenarily go short the US market. They literally can just decide we need to allocate capital away from US assets and sell what they already own, which is in itself a bigger pressure than what American short interests could ever rise to. Um, so I just want to make that distinction a little more clear. And I think it's natural for U.S. investors to be worried about it, and also equally natural for foreign investors to imagine diversifying their assets away from the U.S. if there's going to be a global kind of asset deflation that emerges out of this unwind.
That's real. I mean, I'm quite surprised you raised that patriotism would be a factor in that investors would consider, American investors would consider. But that's really something interesting to keep in mind to see
Yeah, it
how
has.
that's kind of enforced culturally through messaging and signaling through the White House. I don't have my finger on the pulse like you do, but I haven't really seen too much of that above the line. Have you?
In terms of.
Like about the patriotic sentiment of supporting the administration's financial objectives.
I think there's growing momentum here, to be honest, that people are trying to bring a sense of national solidarity into the mainstream dialogue. I think, unfortunately, some of that energy has been done in a pretty harmful way as well, in terms of trying to define what is the American identity. And people come with lots of opinions on what American identities may mean that people disagree with. Um, but one book I read recently that really spoke to my heart was Alex Karp's book, The Technological Republic.
Palantir founder and CEO. Yep.
Palantir, yes, exactly. Have you had a chance to read that book, Archie?
No, I haven't. No.
Okay. I think it's an amazing book, one that maybe you would read before your next podcast on the motivation of patriotism in capital markets. But what the book essentially addresses is uh, that a lot of the misgivings of American capitalism today comes down to a breakage of the relationship between like the technology sector and the government, which is that most of like the amazing technological revolutions we've had historically were funded by the government. Things like space travel or atomic weapons, all these things were heavy research projects funded with public budget that eventually found commercial opportunities. Internet, same thing. However, the culture has changed, which is that post the rise of the internet driving a more commercial and consumer centric agenda, that there's a whole cohort of technology companies that don't actually respect that relationship with the government. And therefore, we have a lot of companies that are building great stuff, but they can also appear a little frivolous at times. Like DoorDash is great. We all love it, but is that the most important thing to have your meal delivered, 10 minutes faster than having the ability to call somebody and have it? I mean, it is. There's great efficiency being gained, but it's a little bit consumer centric. Online dating, great stuff. Matchmaking, sure, a little consumer centric. So the whole book is essentially talking about how to rebuild a culture of American patriotism, you almost need to go back to the roots of finding a bridge in the public private partnership, which is so absent in today's dialogue. It's absent in the Trump administration, it's absent really in the Biden administration as well. And no one really wants public private partnership. But the reality is, only by having public private partnership in a genuine way that people can be convicted behind can you have the emergence of national pride and national solidarity and this idea of like greater good you're doing on behalf of the country. And this is a cultural rot, if you will, in most recent years that I think the United States is navigating very carefully, but one that is going to take more emergence into the mainstream dialogue.
Uh, that the government essentially funding technological innovation has been something a guy like Chomsky's been writing and talking about for a long, long time. But from what I understand, it's essentially taking the risk where industry would not. And my understanding right now is that technology companies are awash with money like nothing we've ever seen before. And so as a result, they're taking, they're spending a lot of that money on things that they call moonshots, essentially initiatives, innovation with no real obvious prospect for commercialization, but maybe something interesting will come out of that, kind of like their equivalent of sending a man to moon, for example. There were all sorts of technologies that came as a result of that endeavor that were not intended but were transformational as well. The trouble is we're hard-pressed finding what those transformational innovations are from the
Well,
commercial sector.
it's also that those transformational investments take a long period of time and there's
Mhm.
no quick return of capital. And the other problem is with the hyper financialization in general, with where the world is going, where venture capital is also becoming an institutional asset class where it's demanding a certain return hurdle. Everyone reacts to incentives, right? And so, are you going to take moonshot bets where it may pay out over decades rather than a few years? And the challenge there really historically is that if there's no like public capital to participate side by side where you're getting some of that subsidization benefit, I think the risk reward doesn't make any sense. Like it would be better to invest in like a Bumble and actually have it get acquired by somebody who's a bigger player who's flush with cash, and that certainty of that outcome is a little bit more likely than investing in like the next big, world changing, transformative, whatever it may be, cellular engineering to the fastest planes on Earth that are being pushed into new frontiers. There's no doubt commercial endeavors about it, but it's not receiving the same level of attention relative to some of the other things that may be a little bit too hyper consumerized.
I agree, and I guess to give the technology companies a little bit of credit, like maybe they are innovating some transformational new technologies and techniques or whatever it is internally, but it's just exposed to so few potential entrepreneurs internally, and also their internal approval mechanisms that are very limiting. Whereas when the United States government did it, it was open to a much larger section of the economy and entrepreneurs in order to be able to find a commercial
Yeah.
application. So maybe that is also a limiting factor. I guess the point that I wanted to make was that essentially the government funding technological innovation for decades without any real commercialization opportunity from the outset, requiring business case approvals as such. They were more mission oriented. They were doing that to solve national problems, and as a result of the outcome, that whatever the successes that may have arisen from those endeavors, then there was a sort of a national unity around that. They were not really undertaking, perhaps with the exception of the moon, the moon landing, there was a sort of national pride to that in competition with the USSR. But generally speaking, the research that's funded by governments are not really with the intention of galvanizing national sentiment, rather to solve national problems.
Yeah, yeah. And this is the greatest misunderstanding and blind spot that the United States has against China, which is that China has excelled on the public-private partnership. And if you imagine what it really means to have a big economy in the ways that really is producing things, you will have seen that China actually has invested in all the right things that prioritize national security, right? I think there are a lot of stats out there that show you China is much bigger than the US in production of really important things like cars. They're 3 times bigger at manufacturing cars. They're like 20 times bigger with the cement industry. They are controlling the mineral refining processes. That is now a strategic issue for the United States. So they're actually investing in the things that drive national security as an equally important construct of the profit opportunity. That's the sentiment I'm trying to allude to, which is you do not hear about the US talking about venture capital this way. You do not hear about US investors bringing patriotism as part of the dialogue of investing in certain subsectors for the greater good of like national security or patriotism. It's actually, I think, somewhat unpopular that may then now become popular. But the reality is China's been riding this for a long time. And you cannot underestimate how important that partnership can be, especially in times of crisis.
It's really interesting you say that, because I see one of the, I guess, the national principles is effectively, let's leave it to the market. The market will sort it out. But the market will sort out commercial successes. It can't prioritize what the national objectives are. And I think to that extent, I think the ruling class in
Yeah,
Washington
I
has
mean,
been quite lazy and complacent in that regard. And I guess we're living in a time when we have a counterexample to show that up in a quite spectacular fashion
yeah,
of late.
I would go one step further. I would say not only can the capital markets not solve that problem, but they can exacerbate the problem. And that's actually one thing that Alex Karp also alludes to, which is if you look at the biggest growth of the United States in the tech sector, a lot of these, the Max Evans, if you will, come from the advertising business, right? Facebook, etc., advertising. If you think about philosophically what it means to run a great advertising business at a cultural level, it means you have to appeal to everybody, right? That's how you cast the widest eyeballs. This also means at a cultural level, you cannot actually take any views on anything, because the moment you take a view on something, you're going to alienate some other subpopulation. So by definition, companies like Facebook, if they're trying to be maximum revenue generating companies, like you said, the goal of capitalist interests, the downside there culturally you can imagine is that these companies then become faceless, and they are literally just a platform of things where they take no views on anything. And that means they are no longer participating in the agenda of serving a cultural fabric for the country. And so Alex Karp talks about this a lot. Like, one of the reasons we've had these issues with wokeism and all these things is really because at some level, there's a whole generation of young people that are now becoming adults who have never been taught how to engage in those types of dialogues, because the very notion of offending somebody was so detrimental to the societal standards of expectations. And that, if you really ask why that could be, it really emerges with the profit motive of the search ad business, because you cannot have that viewpoint in which you have to be as clean as possible to have the widest maximum goal seeking endeavor of profit maximization. So
Well,
when you
we
think
saw
about it that way,
we saw that when Elon Musk took over the Twitter, now X platform, and then suddenly, it turned out to be quite a conspiracy of brands who were sort of jumping at shadows or perhaps had political motives. But essentially, their concerns were real about brand safety. They have long pushed brand safety as a censorship mechanism of content on every platform, not just Twitter. And I guess that touches on the blandness and the facelessness of what you're talking about. I'm really glad that I know China constantly comes up in a context of being an enemy of the United States, and someone who's not an American, I'm not convinced they are an enemy. I think they're definitely a rival of the United States. You can compete on size, on scale, by industry, for markets, for customers, in all sorts of things. But one of the really interesting things that has become apparent to me is the contrast between the two nations, and none more ironically than the last 2 weeks, China coming out as a strong advocate for free trade, free global trade. And then we're seeing all sorts of segments of the American institutional elites actually championing tariff protections. My head is spinning with the irony of this situation. And I'm just like, I'm looking it around and like, how is it that a country that's still called, by many people communist, is a greater champion of global free trade than the country which has modeled its entire self-image on being a champion of capitalism and free trade? I mean, essentially, the United States pushed globalism, global trade.
Yeah.
And so,
Well, we have to be a little bit careful as well in what the vision of trade liberalization that the U.S. is potentially promoting today, which is what is loosely, I call it, conditional bilateralism. So I think what the U.S. is trying to reconfigure is that the security blanket's very important and critical, and there are some free floater type dynamics that are happening that is adversarial to US interests, and we need to sharpen the toolings around the exact conditions for which that bilateralism exists. So that is, I think, the crux of the dynamic the US is solving for, which is that if you have global trade in which everybody's part of it, then you can see how the situation gets a little bit muddied with a lot of prisoner dilemma types of issues and different kinds of moral hazards. Well, people will try to do different things for their own self-interests. And we're probably at that point where it's breaking apart because it's actually been incubated for so long where these things are not challenged anymore. And I think the US is not saying like we're going to be a protectionist country as in we're closing up the walls. Like that would be bad for the US too. I think what they're trying to imagine is actually trying to have bilateral negotiations and get more for what they feel like they haven't historically gotten enough. And then I think it's not a question of black and white. It's actually a spectrum of like where are we landing in the relative richness and cheapness of an outcome that historically was foregoed. I think that's the right lens. And so this comes back to, what is Trump's ultimate motivation in causing tariffs and causing chaos? And I think in my mind, in my heart, I still believe his number one goal is to cheapen US cost of financing because that's the engine of US growth. That's the engine of the dollar hegemony. That's the engine of global growth as a story via inflation. And that is the world that is best suited for US to continue its dominance. And to do that, you need rates lower. But to get rates lower, you need buy-ins. You actually do need other countries to step it up and actually participate in funding it. And here we just saw China is no longer funding it. Japan has stepped up. Maybe it's time we need other countries to step up. And part of this dynamic that I think will emerge into some kind of a deliberate, accord type of meeting, like a Bretton Woods type of event that will be memorialized in history for the next decades and on, will be this event where the security apparatus is reimagined by having new buy-ins from capital partners with commitments that can help the US manage its cost of debt. That is the goal, in my opinion, still. And right now, all the volatility is trying to configure the path to bring everybody to the table, whether it's by causing chaos with the trading relationships, whether it's causing chaos in the US stock market to get the Fed to intervene. I mean, you also just saw Scott Bessent came out pretty recently and said yield curve control is on the table, which is a pretty profound thing for the US to say, mirroring the journey of Japan. And I've always said, actually, if you want to know the future, just look at Japan. Japan's basically 30 years ahead. And if you just look at what Japan does, that's what the US will have to do all the same things.
I'm so glad to hear you say that because it's been something that I've been thinking for about 5 years. But I don't have your financial markets experience or background to back that up with anything more than just a hunch. But essentially, my long view is that what's happened in the United States over the last 20 or 30 years is essentially a war between the generations, basically to see off the baby boomers without. I mean, they recognized quite early that the government was not going to be able to fund their retirement. And so one easy way of doing that was to juice up the home equity markets and the stock markets And we're seeing that, and it's going to be an unwind of that gradually, or a transfer of wealth onto it'll probably skip a generation for the most part, to be honest.
Yeah.
Sorry to Gen Xers, but that's probably what's most likely to happen. And how do we get onto that? There's one of these moments I'm finding in every episode that we have to edit where I just lose my train of thought.
No, all good, all good. Yeah, I actually shared a similar sentiment towards the end of last year, where I think the greatest bargain that was made societally as a world over the past few years has been this idea between generations that we traded away uneven prosperity for unhappy peace. That's how I've coined it. What I mean by
The
this,
great moderation.
yeah, exactly. What I mean is, how lucky are we today that generally we don't have military conflicts as an average civilian, and we get to live life very freely in all the ways that we have higher standards than the prior generation, right? We all really benefit from a higher foundation of the basic necessities, right? Like, I mean, amazing to have like Netflix that everyone can watch content and generally kind of have these things that was unimaginable as a median good for a prior generation. Um, so the piece is good, but the
The
cost.
piece is all right. The piece is all right because there's another part of this. So I get what you're saying from a consumer, commercial, retail, technological point of view. The baseline is quite a lot higher, right? We have a fantastic foundation. But in terms of meeting our fundamental aspirations as human beings, community, family, community, home ownership, and a decent living, I think all of those have been eroded for at least 20 years. I, I've been in the job market just over 20 years, and I've been waiting for the housing market to correct to a significant or meaningful amount, much like the cycles that I'd grown up sort of experiencing as a child and that I'd studied in university. And we really haven't had the kinds of drawdowns that, for example, my parents did as an opportunity to buy. So I'd always sort of grown up thinking, just save a bit of money and the correction will come and you'll get your opportunity. And it never really came. We've just been waiting and waiting. And I could never put the pieces together until I found Bitcoin and I understood all about money printing and liquidity, holding up market prices and all the rest of that. So I guess you do have a point. We do. Like we have these devices and we're doing this across the world, and that's fantastic. But by the same token, like I live in London, and the tube is shithouse. Meanwhile, I see the 97th largest city in China having an airport that's better than Heathrow. So in one sense, I understand and I agree with what you're saying. In another, I think I'm not sure that the next generation is going to live better than the previous. I don't know that kids growing up today will have better lives and better prospects. I don't have that confidence. And we're starting to see sort of like decades-long polling starting to trend much lower about the optimism people have for themselves to live better than their parents did. And I think they're starting to hit like record lows in that regard. And I am a little bit cynical about that, actually. So in one sense, I do agree with you, but then I see like, okay, well, some of these other basic things that we all aspire to, starting a family seems like it's harder than ever. And I know I hear people like Elon Musk say, just do it. People were poorer than you 100 years ago. And it's like, it's not the relevant point to be making that people were poorer or they had a lower technological foundation to do that. It's that relative to our circumstances now, people don't want to experience further impoverishment in order to be able to achieve those aspirations. The direction should be up and better and more civilized, more relaxed, more prosperous, more affluent. And unfortunately, I think they're right to feel that way because we're not treading water anymore. We're not maintaining a level. I think that we're starting to erode a lot of those foundations that make it possible for a lot of people to achieve their aspirations. Interested in getting your thoughts on that.
No, I agree. I agree. This is why, I say unhappy peace, right? It's peace,
Yeah.
but at what cost? And the reason of this unhappiness emanates from exactly the conditions you described. And if you think about what you're alluding to is essentially the victims of financial repression. And financial repression is ultimately why we have a peaceful period, because It's easy to steal money from the future because it's faceless. These children are not born yet, and they will not have power for another 30 years to advocate for themselves anyway. And so, this perpetual cycle of debt is actually stealing across generation. And if you can't steal from your neighbors, you might as well steal from the future. And this is the trade-off of peace. And I think this is the condition that is challenging to really discuss at some level because we're all benefiting greatly from the peaceful international relations you've generally enjoyed, but there is a cost to it. And
Mm.
this financial repression ultimately creates asset inflation. It creates all kinds of dynamics where people are not dying anymore because they're not going to war, and they're actually therefore over investing in human capital. I think about how, like, for example, my parents, my mother in particular, was one of six. And when you have six children growing up, part of the calculus there is not that you're investing all six to become the next princelings or the next best things of the Zuckerbergs, right? You're just raising six kids because they're capital and they can do things that can help you in the unit of the family structure. Um, People don't think like this anymore, right? Each children is precious, where they're going to become the next Zuckerberg. So you overinvest in that human capital. Well, why do we do it? Because it's peace. You know they're going to live long. They generally have great health. The standard of living has gotten higher, and it's fair. But in a world where there's war, where there's unexpected kind of deaths or unexpected life circumstances, you would not invest in human capital the same way. And this creates even more inequality generally as a civilization. And this is something that Bitcoin, I think, is right for the moment of now, which is that Bitcoin is one of the escape valves that I've preached as a way to opt out of the system of that financial repression, where instead of stealing from the future, you're actually investing yourself for where the future world is going to be. And Bitcoin is like a unique conduit to hedge yourself away from that social barter that I just described and opt out of it.
Mm. I want to get into Bitcoin, obviously, quite a little more in a second. But I guess the train of thought that we had before I went on my tirade was, um, if Trump intends, or let's just say that his motive was to shake things up and then eventually come to some kind of negotiation or a new accord, as you mentioned earlier. Do you think he's gone about it the right way? Because it looks to me like he's alienated most of the world against him. And I think there was a leaked document just overnight, or perhaps a couple of days ago, that the administration admits one of the objectives of this whole psychodrama was to isolate China and essentially give the European Union the choice of who they wanted to trade with, either with America or China as a primary trading partner. And I wonder whether or not Trump has eliminated some of his options and undermined the goodwill that the United States, had previously enjoyed, and perhaps is a little bit precarious right now. And so, one of the things I saw somebody mention was that this whole tariff drama is essentially a one-way door that once you walk the rest of the world through it, they no longer can walk back and see, it's difficult to return to a relationship when when you discover infidelity, right? And so this is kind of like that. It's a bit of a wake-up call for the rest of the world that actually this administration is a little bit more transactional and doesn't really pay too much heed to decades-long partnerships.
Hmm. Yeah, definitely great risks there. I think some of the dynamics, nonetheless, is that people tend to have short-term memories, and it can be fixed if we were to right course itself. Also, you know,
You think it can be fixed? You think these relationships have not been set in opposite directions now?
I think it can be fixed, though people will now ascribe a higher probability of needing an outlet and as a hedge, which is why I think it's good for Bitcoin. Anytime you increase the probability of people needing to reserve room for tail risk scenarios, that's good for Bitcoin. But I think it can be amended. Ultimately, here's why. The EU is also likely a motivated, self-interested actor in which they will do their own decisions based on what's good for them.
Sure.
And it may feel like actually if China is the bigger economy and therefore China is going to provide more opportunities in the US, for example, like the Airbus versus Boeing dynamic, right? That just unfolded with China canceling all the Boeing aircrafts. It might look like it's good for the EU, and the EU then might actually get closer in bed with China. But the other reality is, and you should read Clash of Civilizations by Huntington, there are very long term moving psyches as well as to defining these geopolitical relationships. It's not just driven by monetary value, there's a great importance of cultural alignment. And it would be a little bit surprising, in my opinion, if the EU thought they were closer cousins to China than to America, flat out. And you cannot underestimate that. You cannot underestimate ultimately when you look across somebody at the table and you stare into them in the eyes, is this the person that I know? And I still think Europeans know Americans and Americans know Europeans much more likely than China will be able to convey the same sense of kinship. And it could change over time, but for now, I don't underestimate that discomfort and how important that also becomes in striking these alliances for the long term.
Yeah, I just meant that whether or not the European Union would be willing to accept Trump's choice of options that he's presenting to them. It's us or China, and Europe might just say, well, actually, we'll do it our way, not your way, and we'll keep our options open, which is, I guess, what you're suggesting as well.
Yeah,
You
well,
know,
they're remilitarizing, and I think in general that's also maybe something the US would have wanted. And so we're just imagining like a world where it's not going to be so, emergent that the US is leading the entire security guarantee, that there may be some necessity to have more security guarantees that are enacted by other players in the space as well, which is expensive. Which is,
yeah, and that was one of the things that Trump has been commenting quite loudly about is that Europe is not paying its way into NATO, and if you know if the European NATO partners aren't paying enough of their share, and America was effectively subsidizing NATO. So if they do remilitarize, it's essentially one objective that Trump was kind of looking to get them to do more of. It will have achieved that anyway. There's an interesting phenomenon that's popped up in the last 48 hours. I mean, so much has happened in 2 weeks. We're essentially talking about the same things that have all happened in the 2 week spans. But, I'm starting to see a lot of TikTok videos about manufacturers for luxury goods, European luxury goods in China, who are saying, hey, don't buy from them anymore. And I wonder, is this like it's such a coordinated and concentrated burst of activity? I'm like, is it possible that this is some kind of state initiative to undermine European and global brands by encouraging international consumers to buy directly from them as a result of this whole tariff saga that's unfolded? Do you think that's possible?
you would know this better than I. I have not followed closely what is happening on TikTok. I admittedly actually don't have a TikTok account, and
It's actually all over social media, and I'm just stunned at how quickly it's gone viral and so well produced. These videos are so well produced, and the sales pitch is pretty obvious, right? Hey, don't pay $3,000 for this; you can get it for $30 or three
yeah.
hundred dollars.
But this is kind of the point that I'm landing, where the cultural gap of understanding behaviors is, if that's the case, misread, right? Like people buy luxury goods not because of the cost of the goods themselves, but because of the notion that it is something like luxurious for them, and they feel good about it, and they want others to feel good about it, and that whole ritual is why this whole industry succeeds. Of course, you can get knockoffs and all these things, and this is very Chinese actually in the way that they're imagining, hey, you can buy the same bag for less. And what they're culturally missing is no one's going to buy it because the whole point is to overspend for the idea of feeling like you were elite and able to achieve luxury. That's a very human condition of American capitalism. So if this is a coordinated campaign, this speaks straight to my point that the cultural barrier is so high that they do not understand each other. I do not think those TikTok videos will influence Americans to then go, oh, instead of buying the whatever bag from Italy, I'm now going to buy the same design from China. It's not going to happen. And um, this this kind of culture war, if it were to rise, you will see more people kind of gravitating towards defining like their cultural values, their national identity, what they stand for. Do we like counterfeits? Do we like things that are free floating? And actually refute it. Um, so it's funny you mentioned that. I think also like living in Korea, where you would get the sense for both American consumerism as well as China being one of the biggest export market for Korea and heavily politically influencing. You get to see those cultural battles up close. I look at Korea, Taiwan too, at some level, as the really epicenter of where these cultural battles are happening. I don't live there anymore. I live in New York, but every time I go visit, it's really shocking to me how many, how much of that culture war is happening in the Orient kind of versus the West. That Korea is an American ally, proudly living so, but also neighboring China, frankly, as a security threat and trade partner.
Let's talk about Bitcoin, Jeff. You made an interesting comment about the strategic Bitcoin reserve. That was kind of a little bit, I guess, guarded, might be the right word, or just a little bit cautious about the prospects of an SBR. I guess a little bit less than some of the bulltards on the timeline like me, who are perpetually sort of, more, higher, faster, all that sort of stuff. But you were a little bit apprehensive about the prospect of an SBR. Can you explain to us what your reasoning is for that?
Sure, sure. Um, I think that the strategic reserve for Bitcoin can be an incredible output at the right time. And my overarching conclusion is now is not the right time. And there's a few reasons for it. The first reason is that the US embracing Bitcoin at this moment in time would accelerate the decline of the dollar hegemony. And I don't think the US is ready, frankly, to unfold that narrative just yet. They may come to that conclusion eventually where they need to reset the monetary order, but now I don't think is the time. And this ultimately goes to a Venn diagram that I showcased last year about what it takes to be a sovereign to buy Bitcoin on their balance sheet. What are the three conditions to imagine the next El Salvador to emerge? And I laid out three things. One is the country needs to be not a direct US ally. Because if you're a direct US ally, I think when you buy Bitcoin, it would in a way offend US sensibilities at the highest level because you're essentially rejecting the dollar hegemony. And so countries like Japan, for example, countries like Korea, I don't think can ever announce a domestic sovereign reserve because they need to coordinate that essentially at some level with America being at the center of that dialogue. And
So Russia, Iran, for example, China, some of these countries are under sort of financial sanctions in
yeah,
the American-dominated system.
Yeah, and they're more likely to do it because again, yeah, to your point, they don't have that relationship with like the U.S. bond market, and they can take more risks. The other thing is that the country I think has to be in a state of political popularity for crypto, which means the demographics has to skew young. So my problem with Japan is actually the demographic skews a little old, and it's not like a politically populist thing to embrace crypto, but the countries that will find it to be populism, where you'll have political candidates that are pro crypto presidents, will emerge really from countries that have a lower demographics by age. That's
Is
the
that, you think, because of an affinity with crypto or because they've got a longer term time horizon?
I think it's just the most obvious trend that young people generally like being pro crypto and the older people do not. And so if you want to win elections, the crypto vote might count. And in that case, if it's in your favor, you're more likely to embrace crypto and promote it as like a store of value, even for like your sovereign balance sheet.
Hmm. I guess on the retail side, we saw initially the people who adopted Bitcoin were those who were sort of ideologically aligned with libertarian values, deeply technical people, and then it kind of spread out to its first main retail application with a place like Silk Road, for example. So still we're talking about the misfits and the outsiders, right? Because when you have a look at the sort of activities that were being undertaken there, and I will constantly sort of meet people through Bitcoin who are like, yeah, I was just looking to score. And after a few times, I realized I had a little bit of this and it was going up in value, so I just kept it for all time. And after a while, they got into the ideological rabbit hole and became committed Bitcoiners as well. And I thought perhaps on the nation state level, there would kind of be a similar kind of trajectory where, on the retail, you went retail, sort of independent hedge fund, kind of, right now in this cycle, it's becoming more of a corporate institutional thing. So you can see how gradually over time the scale of investor has increased. And I thought nation states would sort of follow that as well, where we had, Bhutan, El Salvador, maybe next we would see a country like, I don't know. I mean, even Argentina. That's a G20 country. That's like it's really leapfrogging quite a few stages. If Argentina under Milei had done that, I know he's not really looking to do that, but there had to be
Yeah,
some kind of middle ground to transition, not just leapfrog everything and go straight to America. I did not expect that at all. And 18 months ago, even 12 months ago, it was really kind of a fanciful proposition. But now here we are, and just sort of circumvented that entire process. And look, it looks like it's going to happen. It's probably going to happen at a scale much larger than any of us had anticipated also. So I'm like, okay, what are the consequences of that then? So America establishes a strategic Bitcoin reserve. You mentioned about perhaps some of the sensitivities if an allied country had done it. What does that signal to the rest of the world?
well, I think it signaled nothing because it's an executive order, and an executive order is not the will of the people. And so I make a distinction here when we have a legislative strategic reserve being extremely distinct versus an executive order. Same way that the Biden administration came with executive orders on ESG related mandates that people did not take seriously because it was not the will of the country, immediately then being unwound by the next administration, is the kind of risks you run when you pursue this path. So that's partially one thing. The other thing is that the strategic reserve, in my opinion, in the United States cannot be done by itself because the alliance is mutual. If you want to do the strategic reserve properly, you need buy-in from your capital partners. You actually do need to give your allies a heads up that this is actually a mission that we're looking to fulfill. You might want to also be a part of the cohort in which we are enacting it together as a trade ally because we know you depend on us for our US assets. And there has to be some kind of coordinated effort because if you don't do it this way, the you pending of a monetary order is like a big deal. And you cannot do it by yourself. You have to have alliances. And if the US goes out and does Bitcoin strategic reserve by itself without telling Japan that they're going to do it, the Japanese government, in my opinion, would be incredibly caught off guard. And they would literally be so offended that they are on the other side of funding their entire trade deficit and they don't even get the idea that this new regime change is happening for them to participate alongside together. So in my view, if there is a real motivation for a true strategic reserve where they're accumulating Bitcoin, you're going to see a lot more global multilateral participations and conversations. It's not going to be these one-offs. And these one-offs are all, at this point, I think, playing to some level of populism and election kind of capabilities for winning votes. And that's not enough. It actually has to get to a level where there's serious intent. And so that's why ultimately I just think that the US has a lot to lose at its timing. And so the US is not likely to kind of permit this path forward. And the one thing, I will be corrected on if it happens is if we do get a legislative strategic reserve, then I would change my view. And I would, of course, even more likely double down on being wrong if the strategic reserve allows for the accumulation of Bitcoin, which frankly is the most challenging thing to convince people to buy into an asset right now in the priority queues of other things the U.S. could be spending their capital accumulation on. So
So you mean accumulation over and above merely retaining what's been seized and what may continue to be seized through law enforcement actions.
Yeah, like I mean, the executive strategic reserve was literally, in my opinion, nothing. It was truly nothing because it didn't do anything. It just said you can't sell the current Bitcoin that you already own. Maybe people find comfort in that, but the reality is Bitcoin is not moving on a lack of selling pressure. People want there to be buying pressure, and they want global opt-in, and this hasn't really paved the path for that to be the reality. And I actually think it's okay. Like the U.S. doesn't need to do it right now, and in fact, I would argue they shouldn't because. Um, when they do, it'll be so seismic. It'll be so seismic the day the US decides to buy Bitcoin on their balance sheet for real that you will know the world changed the next day when you woke up. It'll feel this way. It'll feel so large, and it's not what you felt in January and beyond. And you'll know. And for retail investors, ultimately, and civilians, they should benefit before the sovereign action as much as possible. So my hope is that more people will accumulate Bitcoin across the world at a sovereign level of the individual, and then they can all benefit once the sovereigns opt in, because this cost basis matters too. Like at some point, you want the sovereign to step in last, because if you truly believe Bitcoin is a egalitarian good that is individualism first before the sovereign, we all need to participate in advance of it. And it would be a shame, in my opinion, if Bitcoin goes to unreachable prices in 2025, where we still left 80% of the global population to not participate in this regime changing opportunity. So I take it as a relief that it wasn't really a big deal, but also one in which one day it will be, and we should all prepare for it. But it's going to just take a lot longer than people think. It's just simply not enough to kind of be a crypto bro, to go to DC and lobby for this thing, when you realize actually there's so many other priorities that the US government needs to spend on. That's actually part of why, like, after that whole thing, crypto's never really found its issue back in the White House. This is the other thing that I kind of was acute on, which is whatever funding election campaign went into last year for Trump's election, it culminated with that bill. And I thought, man, how short the industry came for funding so much of the goodwill in helping seat a president as the first crypto president, and how little the industry ultimately, I think, got out of it. If this is the apex moment of like,
Well, you really think so? Like you don't see a lot of value in, for example, Sub 121 being repealed, allowing banks to hold
honestly,
coins. You
honestly,
don't think?
honestly, Archie, those things were so evil and so bad that anyone in their right mind would have had to think the right thing to do is unwound it. It's very hard for me to give credit to undoing evil things as if that's pro anything.
But there was no guarantee that Trump would have even won the election without the support of what was quite an effective pack and quite a large pack as well. And so essentially, even if that's all we got, that's still quite a significant win, and also the change in regulatory regime as well. So we've got the end of enforcement by prosecution, or whatever it's called, essentially a punitive regulatory regime. Gensler's gone. We're getting more people who are receptive to the industry in general. So I think the tenor of the whole situation has changed, even though there's nothing significant and tangible as yet that has flowed on from those decisions. I still think the messaging has been good. The actions that have been taken so far, let's see what happens. I think they gave 90 days from Trump's order for some kind of report to hit his desk, and we're yet to see what the results of that are going to be. But I wanted to sort of counter your, I wouldn't even call it skepticism. I think you've presented a very realistic summary of the situation, actually. I think it's quite realistic. But we're hearing really quite strong messaging. Like Trump's executive director of digital assets came out and said, we want to buy as much as possible. I know David Sachs is incredibly bullish on, he's the crypto czar. I don't know what the difference between an executive director of digital assets is and a crypto czar, but they both seem incredibly bullish about their ambitions for the SPR. So I wonder how do you receive their signaling and messaging? Some of it's quite explicitly bullish.
Yeah, I discount it all. But that's my view. Again, like I'm not saying I'm right. It's just that I operate from a mode in which I ask the most important question, which is what are the incentives? And who is this good for and who is this bad for? And most of my life decisions, trading decisions, judgment on probabilistic outcomes that can be unknowable come from asking that exact question. What is the incentive for somebody to do anything? And why are they being asked? And why am I being told? Um, and it's hard for me to imagine a scenario at this moment in time when it's good for the US to essentially start accumulating Bitcoin. I think it's challenging. It's really antithetical for this current moment from the sovereignty of the dollar hegemony for which they are most interested in protecting. Now, if you marry Bitcoin with a dollar somehow, and there's a stablecoin path in which this could happen, in my opinion, as well, and there's actually thoughtful conversations about that, then I'd be more inclined to think it's credible because we're now meeting a rational solution for a rational outcome. But those discussions haven't happened, and the things that I feel like constantly is in the air is a lot of these hopiums without kind of the political reality for it to happen. Here's the other problem: when you're a public official and you advocate for Bitcoin, and I've seen this journey in my crypto professional career now for a long time, you're essentially in a position of what I call short the put. Because as a public official, you never get the actual benefit of getting it right, right? From an economic perspective, you're not like you're making money as a public official when Bitcoin goes up. At the same time, you get all the downside when it goes down, and you get all the risk, all the reputational
Blame.
risk.
Yeah.
And so, if you are a rational human being as a public official where you cannot privatize your gains, but you have to socialize your losses entirely with the country as well as your own private loss of reputation, you cannot be the person who's going to be scapegoated by making that decision. Any of these people can say whatever they want. But you ask later, are you going to sign your name right now to buy Bitcoin at, I don't know, whatever the price is at the time, it'll be 100K or whatever. Are you going to buy it? Then whoever actually ends up signing that bill and takes the onus and the responsibility and liabilities with it would, in a sense, be like a hero because most public officials cannot rise to that standard. And so that's kind of what I'm waiting for. Like, if there is someone who's willing to put their skin on the game as a public official to do that rather than just talking about it, then we can really drive it forward. And again, this goes back to the legislative thing. Once you have the will of the people that you can credibly say this was an outcome that all had wanted and I happen to be the agent of action, then you get some cover. If you're just a random executive ordered individual doing things, you don't get that cover. You don't. And so then your reputation goes down with it. And most smart people will not step into that situation.
You mentioned about the potential offense of allied nations at the prospect of the United States buying Bitcoin as a strategic reserve. But do you think that the potential size of something like that, even if it's as large as $1 million, what would that be? $80 billion worth of Bitcoin, essentially. Is that significant enough to really cause offense? To say a country like Japan?
I think it's very symbolic. Yeah. Yeah.
Okay. Now, we can't talk about Bitcoin without getting the head of Alpha Strategy. So without getting your thoughts on, what's happening with the cycle. It seems that we're in a period of consolidation at the moment, similar to what we experienced for about 7 or 8 months last year as well. So this whole period of not much really happening, just trading in a range. And what do you see for the rest of this year? And do you still think that we're riding cycles? Do you think, did you ever subscribe to the 4-year cycle view, or it's just following liquidity? How do you sort of view the movements of Bitcoin? We'll get your view on this year first, and we'll talk about the rest.
Yeah, I think the 4 year cycle historically was defensible and also uncorrelated to other things happening in the world that happen to sync in with 4 year cycles. So, what happens in 4 year cycles? Where there's an election every 4 years. That's not related to Bitcoin. It just is a cadence of like a societal kind of campaign of how we live our lives. Then there's also general credit expansion and contraction that happens generally in 4 to 7 year type cycles, but relatively it's gotten shorter. And I would say nowadays it's happening within 4 year cycles. And so that also coincides with the Federal Reserve's policies as well. And of course, there's the idiosyncratic factor, which is the halvening in itself. But I think over time, what is emerging is that the halvening will generally matter less as there's more adoption at institutional levels in which it becomes a global macro commodity asset. So my view is that we're probably not going to follow a 4 year cycle pattern anymore, strictly driven by the halvening. If it does follow a 4 year cycle, it'll be driven by macro forces, which could be the case. But more likely than not, if there were to be like a real input to the calculus, I think it's just going to be realized profits and unrealized profits and losses in the calculus of adoption. So, let me just explain that a little further. We know for a fact that the Bitcoin ETF was a big launch of new capital flowing in, right? And that was now, I guess, a year and a quarter ago, year and a half ago. And at the time, Bitcoin was trading around 50,000, 60,000. At some point, these investors will have a concept of an IRR, or how much money they made over a period of time, which either meets or doesn't meet their return hurdle. I consider Bitcoin's return hurdle to be about 20 to 25% as kind of the way that institutional investors allocate capital to make it worth the risk premium. So if you bought it at 50 and it goes to 100 in a year, you did really well. If it stays at this range and maybe even goes down to like 75 by the end of the year, that means that in 2 years, you are up 50%, right? Which means you're just about that mark now, where if Bitcoin closes at 75K, you're at the cusp of that return hurdle.
Over 2 years.
Over 2 years, 25%. And that's a very reasonable time at that point for an investor to be like, okay, I'm way too close to the return hurdle I have to justify to why I made this trade, and I'm going to sell because I don't want it to go down to 60 and not make my return hurdle. So what I'm trying to imply here is that some of the marginal buying and selling pressures are going to start emerging out of this calculation of return hurdles relative to the cost basis of the capital that flew in. This is one of the reasons I look at the 75K number as like a very important benchmark for where Bitcoin needs to potentially consider where there could be a liquidity gap. Because we can go a little bit lower because we're not at a full year yet. But here's the thing about IRR, right? It moves with time. So if we're talking about June, it can go to as low as 60 and then they might still sell it at 60. But the point is, the longer you go out, the higher that floor becomes in which there can be a liquidity gap. And I think this is the most important metric to start considering. And to do that, you have to actually know what are people's cost basis into which they came in for the cycles, and how can you anticipate their behavior.
And I wanted to get your view on, I guess you have a view for the rest of this year on what perhaps Bitcoin might do, because we have been consolidating for a while, and there is a view that's sort of creeping into the commentary that maybe that's it, because we're seeing stocks sort of turn over. We're seeing Bitcoin turn over, particularly on some of the longer time frame indicators that are remarkably similar to what happened at the top of the last cycle. So I'm interested in your point of view about where we are right now, and do you see that the market is actually turning bearish, and what do you think that means for the rest of the year?
Great question. Well, let's start with what we know. We know for a fact that the trade deficit and issues around the war that is being waged is causing chaos. And we know there's a winner, and the winner is not Bitcoin, it's gold. So if you believe in this trend of long lasting chaos, then I think in general, volatility is going to be higher. And for now, the market has decided gold is the outlet for which they're going to pick the store of value construct. This is another reason, by the way, why the strategic reserve was too early for its time, because the world has not bought into the construct of Bitcoin serving the asset the way gold has. So this is the first thing that needs to happen before even a sovereign entity can step in. We need to see Bitcoin outperform gold in moments like this, like as a populist kind of moment versus an institutional setup. My feeling in general is that if volatility goes up for other assets, it's a net negative for Bitcoin. And the reason is if you ask yourself fundamentally, why does somebody pick gold instead of Bitcoin? Usually, what you find out is that people who choose Bitcoin tends to be attracted to it because of the volatility. So volatility actually is one of the defining features that is an asset to a Bitcoin investor because they expect that volatility to potentially compound, or maybe they're creating trading strategies around that volatility where they can extract more premium. But the reality is hyperfinancialization has generally created a lot of different opportunities where volatility is an asset in itself. So if S&P volatility goes higher than Bitcoin's like it has recently, then it means that most people would actually then prefer to potentially trade S&P because they know what that is. They don't know what Bitcoin is just yet. So on a net basis, it's bad for Bitcoin if volatility of other assets go up. And that is what I think will continue to happen for the foreseeable future. I think it's not surprising that the MOVE index continues to be elevated, as does the VIX. And we are seeing more volatility in the liquidity plumbing generally with the spreads, especially if you look at the SOFR and Fed Fund spreads. These are showing signs of instability building up. In those times, it is likely that a risk-off sentiment will still hit Bitcoin a lot harder than other assets. So far, it looks like there are windows in which it can look decorrelated, but if you look out over a longer observation window, it's not really great when risk assets sell off for Bitcoin in general. And I think I have to imagine there's some room for that to happen in the next few months. Part of it is because I think two things. One, there is generally a lot of weakness to the U.S. kind of outlook in general pessimism about whether we are going to be in a recession or not. And then two, I actually do think there is some will by the Trump administration to cause a stock market crash. And I think part of that will comes from, again, needing to intervene in the bond market to imagine a way to bring the 10-year rates down. Because I still operate from the view that the most important thing Trump really cares about is his own bags. And his own bags is commercial real estate. And commercial real estate is suffering so badly that if you do not bring long-term rates down, all the equities are going to get bageled. And so you just know every night when Trump goes to sleep, the thing that he thinks about really preserving for his own self-interests would be to bring rates lower. And one way to bring rates lower is actually to cause chaos and intervention as a necessity. So this is another reason I think equity markets can be volatile longer, that it could even go down. And that's just not a good environment for Bitcoin. So for now, I tend to be a little bit bearish. I think it's going to be a little bit more volatile in ways that you've already seen. Bitcoin volatility has gone down as a result, right? Bitcoin volatility, especially to the upside speculation, it's like the lowest skew it's ever been for a while. I think Bitcoin vol can't even stay above 60 anymore. Every time it goes above 60, there's someone selling that vol and it goes back down to 54 or 55. Those are low numbers for Bitcoin vol. And that's not good. Bitcoin has this effect that I've also alluded to in the past, which I call a positive Vanna dynamic, which is that the price goes up with volatility. Because again, people really like Bitcoin when it's volatile. That's when it shines. Gold is great when it goes up like this over a long period of time, which is what it's been doing. That's what gold investors want. Bitcoin investors do not like this.
No, and if you compare, like Bitcoin's, gold has been in a bull market for just over 2 years. It's had a very strong run, and if you correlate that with Bitcoin's run, it enjoyed a similar price appreciation in terms of trajectory. Obviously, the quantum is much greater, but Bitcoin does it in spurts. It
Yeah.
goes up for 6 weeks and then it kind of stays at that level. There's a little bit of volatility within that trading range for months. And then it does it again. And we've essentially had basically 3 steps up in price since the bottom of the last bear market.
Hmm.
Whereas gold has exhibited a much smoother, gradual, and prolonged increase in price.
Yeah.
So what you're saying absolutely holds true. You mentioned something before that I just wanted to pick you up on because you said chaos leads to lower rates. And I, I wanted to give you my interpretation of that. Did you mean as it kind of implies lower economic growth? When the market's becoming more volatile in response to what Trump is doing, it's because they think the economy is effectively going to tank and then the Fed will have to step in with lower rates. Because typically my understanding is that, just thinking back over time, is that higher volatility leads to higher uncertainty, leads to higher cost of capital. So I just wanted to get you to just elaborate on that if I have misunderstood what you were saying.
For sure, for sure. The common belief is that the economy drives the markets, but there's a whole perspective in which it's the other way around. It's actually the market that drives the economy. And this trend has solidified to greater significance because so much of US wealth is actually deriving the confidence in their ability to spend. And if you don't have asset inflation, it can actually play a reverse role in suppressing the economy because the wealth destruction itself creates a loss of confidence. So the traditional wisdom of the economy driving the markets versus the markets driving the economy is the important thing to get right. And this is a result too of the post '08 financial system where there's so much leverage in the ways that is created in the system where um, the volatility of the underlying collateral matters a great deal for the sustenance of the assets. So what I mean by this is um, the whole like banking system is created off of repos and leverages that requires like a certain haircut to these collateral. And if bonds start getting haircut pretty badly, then there's like a recursive wind down of leverage in the entire system, which ultimately attaches to equities. And so volatility, to your point, is bad, not because of uncertainty itself, but because it actually drives up the cost of capital by the banks forcing a higher haircut on your collateral. Once you get the higher haircut, you have to start selling to meet those collateralization ratios. And that creates a whole cascading flow of sales. And this is key. This is why the financial stability is the most important thing. And it's related to also if equities market were to sell off, there would be some rebasing effect there on other levered products, and it would be generally pretty bad for U.S. consumerism. Um, and that's how you get the Fed to act. That's actually how you get the Fed to cut rates because the asset deflation is hurting consumption. And then you can bring in the treasury as well to do some funky things where they run different kinds of esoteric programs that have different random letters attached to it, but they all do the same thing, which is inject liquidity into the system. And once you do those things, um, it's really great for an asset like Bitcoin because this is actually the continuation of the debasement of the financial system as we know it. And that could be a catalyst. So, my outlook so far is that we actually probably will benefit the most on Bitcoin if we have some of these cataclysmic events um, that drive some acute outcomes and interventions. And you're also seeing that happen with China recently too, where they've been loosening the FX bandwidth to depreciate the renminbi, which is actually a kind of monetary loosening, but not the one that I think the US wants because that actually exports global deflation, which is a little bit contrary to what the US would rather achieve. It's better actually if China starts to spend its public budget towards like boosting domestic consumption in China, right? That's traditional money printing, and that's actually better and inflationary, if you will, which is good for Bitcoin. I think all those
Mm.
dynamics matter. Also, people talk about global L2, like M2 liquidity, as a way to gauge whether Bitcoin is going to be correlated to a price run. Like the generic wisdom being if M2 liquidity goes up, Bitcoin goes up with it on some lead lag relationship. But the devil's in the details. And the devil that I would highlight is that it matters how the global M2 liquidity goes up. There's many components that drive it, but one of that component is actually dollar weakening. Dollar weakening itself can drive global liquidity. However, I am not sure if that is the kind of L2 liquidity increase that right now at this moment is the thing that is helpful for Bitcoin. Because the way that the dollar is weakening is actually through this tariff war that is casting a more negative outlook in general. That being
So
said,
the reason behind the weakening is as important to whether Bitcoin benefits from it.
yeah, yeah, yeah. I think it matters how the liquidity is created.
Yeah, because when I have a look at the DXY, and I guess people make all sorts of commentary about its composition, there are moments, or at least it signals the beginning and end of regimes that Bitcoin sometimes seem to be aligned with, but there's no real tight correlation. Like I couldn't say that it was a tight correlation, but at times it does look like, okay, when there's a change in regime, Bitcoin seems to also turn. So when I think the last cycle, the DXY, when it bottomed out, Bitcoin topped or something like that. Last time I looked at the chart, I'm trying to recall exactly what the turning point was. But the turning points seem to be similar and they're inversely related, but they don't necessarily move within a regime in lockstep. Excuse me. Jeff, I wanted to ask you about the I guess the coalescence of two industries that are really quite profound. Bitcoin is one, the other is AI. How do you see those two interacting? Do you see them interacting at all?
Bitcoin and AI, I haven't thought too much about. I've wondered about generally crypto in general with AI, where there could be some use cases more specifically. Um, at a high level, um, the same thematic virtues of Bitcoin that applies to crypto, things like decentralization and censorship resistance and permissionless networks, have a place in a model that replaces AI. AI, as you know, in the way that it's currently being developed, is operating in a rather murky area when it comes to the ability to privatize data. And there's going to be, I think, more IP related types of issues that emerge out of the way that these machines are being taught. Um, and you can imagine at that point, crypto could play a role in providing better attribution qualities to permit the possibility of free floating data that is attached to the private individual or the private creator that is furnishing it. Um, because I think AI is immensely useful in the ways that it's become a hit in the way people are using it. But there are damages along the way in which the profit centralization is probably not the correct model, and there is going to be pushback on it, and I think there already are pushback on it, and you can imagine crypto then would play a role in which it would try to democratize some of that access point.
You mean profit centralization in the same way that I guess a lot of these technology platforms collapse the revenues of media companies? I kind of sense that battle has already played out. Or do you mean something else?
Well, I mean something like when people were using ChatGPT recently to like, I don't know, generate images of like pictures using the Ghibli art as
Hmm.
a directive would infringe upon some of the ways that Ghibli now is being involved, though they're not being compensated for having created some kind of cultural movement, right? This is a tough example because at some level, like art in itself is hard to IP and trademark. Like, what's to say like
Yeah.
all art, great art is copied, but it's that energy, and
But
so
it's quite obviously a rip-off of a particular style or a thematic
yeah,
expression
yeah.
of yeah. There was a call the other day by Jack Dorsey, founder of Twitter X and Block, amongst many other um, companies, to essentially wipe out IP law. Now, there are some people who think that's a really freedom maximizing call. And some perhaps a little bit more cynically are saying, because Elon Musk also supported that call, and he's obviously developing one of the most prominent AI platforms with XAI, which these platforms, these machines, they feed on data. Some of that data is intellectual property, and so a lot of people commented that perhaps this is a cynical ploy to release release these tech billionaires and tech platforms from the obligations to respect IP law because they suddenly need it as food for their AI munching machines.
Yeah.
How do you view that whole sort of interplay with IP law and how it clashes with, I guess, the propagation of AI platforms, and the use of that is now pretty ubiquitous, isn't it?
Yeah, yeah, absolutely, absolutely. Again, like you can almost reach the right conclusion by asking the incentive question as to why people are doing the things they're doing, and that's usually a really good shortcut. And but sympathetic to what they're preaching is the reality that already actually a lot of these IP, if you will, has been privatized. So I think there's different categories of IPs that we should be careful on too, where like there's of course true IP that can be like genuine scientific discoveries of things that take tremendous capital expenditure that you need to create a motivation for that investment and you have to protect it. But then there's frivolous kind of IP too, which is like actually the US is known for the being the capital of frivolous like lawsuits and frivolous like patents, but the most extreme version of it is something like, you know, where Facebook already, I would argue, is leveraging off of a bunch of data sets for the consumers providing it without being compensated for it, right? That's the whole algorithm of social media in themselves. And so if you think about that kind of IP, you might be able to see and be sympathetic to Elon Musk's view, which is like that is valuable stuff that is being kind of monetized by somebody in a way that the end investor is not getting credit for, and there may not be a way to actually ever create that attribution. So we might as well get rid of all of it. Like we might as well get rid of this idea altogether about data being like a private thing, data that is different from like IP from research. And I think that's some of the energy that I'm picking up on in people conflating the word IP when they really just mean as personal and privacy related data.
Yeah.
You know, the other thing that I would say is like this is where I think crypto can be useful. Like crypto leaves footprints on the blockchain, and there's great attributions that come from people's behaviors generally being remembered in an irrefutable and irrevocable way that is yours. And if that's the case, then you can presumably have the ability to enforce it with the right social contracts. So there is a world where IP can be useful for those types of data attribution. And I think one of the first use cases you'll see crypto and AI kind of finding a JV moment together is going to come down to that data attribution project.
Will be fascinating to see it play out. Jeff, thank you so much. This has been such an interesting and fascinating conversation, as I expected it to be. Sometimes, people are good on the timeline; they're not good in person. They're not good in conversation, shall I say? And this has lived up to all my expectations. I'm very grateful for your support in appearing on my show, and I can't wait to publish this episode.
Same here. Yeah, glad to do it with you, and hope to jam again next time in the future.
Yeah, you're welcome anytime. And remember, if you're ever in London, you better come into my studio. You make some time, I'll take you out for a coffee and then we'll come and have a chat.
I'd love that. I would love that. I actually think I have a trip to London in June or so, so I will give you a ping when that time.
Definitely. I'll be expecting you now. Thanks, Jeff.
Sounds good.
Yeah.
All right,
Oh.
start you.